Meats shares plunging as the quarterly call just getting started. The company announcing a secondary public offering of more than 3 million shares, around about $700 million worth at the close today. Let's bring in Kate Cox, editor at New Food Economy, and Thomas George, president of research firm Grizzle, to discuss this. Kate, what's your take on this? Is this increase in the float going to be a good thing or a bad thing for the company?
I think it's a good thing. I mean, what we're looking at now is growth. We're looking at cost of doing business. We're looking at growth. You know, the stocks have surged over the last 180 days, but it costs money to scale. So I think we're looking at a company that's evolving, that is growing, and that can tell us something about the larger food landscape.
I mean, some of the growth numbers are eye-popping. Kate, the restaurant and food service revenue up 483% in 3 months. The retail revenues up about 200%, combined growth of almost 300% revenue growth. Just on the question of sustainability, how many more restaurants and food services players can they sign up, and how much more retail business can they do?
Let's ask them. That's a great question. You know, they've expanded capacity to meet this kind of demand over the last couple of months. But who knows whether they'll be able to take on a huge partner, for instance, a McDonald's or a really big name in the fast casual sector. Food service, I think they can handle. Retail, I think they can handle right now.
Thomas, do you think this decision to do a secondary listing, a secondary offering, excuse me, is a suggestion that the company itself thinks its stock is well priced at the moment?
Well, you know, whenever you do a secondary offering, you want to do it at the best interest for the company. I think they've done that. It's the right price point, and you know, from our perspective, the demand is clearly there. Their numbers are out of the park, right? So this is the time you do it.
Your price target, Thomas, is based on estimates to 2030. Is that right? How have you predicted what sales will be in 2030?
Yeah, so this is a stock right now. You're looking at plant-based foods where the penetration is 0.25%. So I think the classic Wall Street dog and pony, next quarter, next year, it doesn't really fit the mold for a company that's growing at nearly 300% revenue year over year. You're struggling to find any company of this size that can do that kind of revenue. So what you really have to do is think big picture, think out 2030. You're thinking like a VC. You're thinking what's this landscape going to look like, and what kind of market share could it take out in 2030?
Well, you've also got bigger losses, Mike. And
sure.
Does that factor in here, or just you ignore it with revenue?
There's obviously a level of scale where they'll be able to make money at it, but it's a question of just exactly. They're still making a product. They're distributing a product. It's not server farms. It's not a virtual network. So obviously, the food industry in general does not have massive profit margins that a young, innovative competitor can come in and completely, feast on and undercut. So I think that's going to be the big thing. And the other thing, I mean, Thomas, I would ask you can try to estimate the size of the overall market, and that's, I think, the basis for a lot of these projections. And you can maybe decide, exactly what trajectory it's going to go. Is it going to go like plant-based milks or something like that? What you can't know is how many other competitors are going to be fighting over that, though.
Well, yeah, and it's a really good point. And from our perspective, we think this goes very much like Nutella, right? There are a lot of other competitors to Nutella, but there's really only one Nutella, right? So from our perspective, I think there will be 3 or 4 major players in this space. It'll be a branded market, and the market share will be split among those players.
I'm with you on Nutella. I totally agree with that point. Kate, they're going to use the money that they're getting from this offering to increase marketing and promotion and manufacturing capability. Where are they on meeting the demand? I mean, you seem to suggest that they're improving it.
Yeah,
are they up to the challenge?
For sure. I mean, they certainly would say yes. But I think it's why we're seeing regional rollouts of products like the Beyond Sausage Sandwich that they launched with Dunkin' last week. They did it in 190 stores in Manhattan. That's a good conservative start to see if they can get a product like that in a democratized chain store like Dunkin' Donuts. I don't think anybody's in the habit of saying we're not up to it. So it'll be interesting to watch the next, year or so where they go.
All right, Kate Cox, Thomas George, thank you both for joining us.